Hello everybody! A new week has come and along with it, fresh market news. RoboForex channel is ready to tell you all about them, so make yourself comfortable. The June is almost over, have you survived it? We hope so, as there are other summer months to follow with millions of opportunities. The coronavirus topic is becoming less and less urgent, however, in the media only. Economists try to grow but just on paper. What's next? Let's try to pick. In this review, 3 worst market fears. Let's talk about each of them. Statistics. Everybody wants to say something. Which markets will be closed this week and when? Be ready. Let's go. Investors are looking at the outer world, where events are abundant and each next one is scarier than the previous one. What markets are afraid of? First of all, they fear negative development of the trade relations between the US and China. Initially, the American side supposed that the White House would introduce some increased import fees for Chinese goods, which frightened the capital market greatly. This would mean that after a long pause of 6 months, the US returned to idea of a trade war and was ready to attack. Such news is like a bomb for risk assets, which showed in the global market decline. Later, the master of Twitter, Donald Trump, president of the USA, calmed everyone down, promising no fees for the time being. He also said he hoped Beijing would stay reasonable in this matter. In reality, the comeback of the idea of trade wars during the pandemics and decline in economies is too bad a signal. The states might easily try to strengthen their positions playing against Beijing. The market realizes this, and gold prices have skyrocketed again and may go on growing upon testing 1,800 USD per troy ounce. The second fear, which became a phobia, is coronavirus. In fact, the surges in the number of newly infected in the US and China look too much like a new wave of the pandemics forming. If this happens, global economies will suffer even more damage, while developing economies will get stuck in poverty. Sounds gloomy but may turn out even worse. That is why the assets that might be called protective and safe haven have been enjoying so much demand lately. The third scary moment is the volatility of oil. The volatility is ruling everywhere, but oil is a special case. Two extremes are fighting here: the desire to buy right away and the fact that the demand for energy carriers is low, but the oil storage in the USA is still growing. The prices are swinging, influencing all the countries, the economies of which are based on oil solely. Enough with the frightening news. Let's get back to our calm bay of statistics. In focus this week: Japan, China, Great Britain, USA and Eurozone. Everybody wants to tell us something. From the Japanese side, we should pay attention to 2 indicators. First of all, the retail sales data. Here, the digits will be low, but this is normal. Secondly, the unemployment rate. The state holds the economy in its tentacles together, so the rate will remain stable. China is also back to publishing reports. It will show its business activity data in the productive and non-productive sectors. The country has been active for 2 months, coming back to life, so wait for something positive there. We will also see a lot of Great Britain. It will present the final GDP data for the first quarter of this year, the dwelling market and business activity statistics. Recently, it was the 4th anniversary of the Brexit decision, and the country has been in the transition period for 6 months already. Negotiations are not quite successful. The issues of borders and trade remain acute, and the pound has got so much accustomed to the conflict that it only reacts to some really bright events. Britain's neighbor, the Eurozone, will also be publishing the microdata actively. We will see the inflation data for June, the final data of business activity in productive sectors of certain European countries and the Eurozone on the whole, and the unemployment data in the region. We follow all these statistics and wait, or not, for revival. Now, investors, important information for you. As the 4th of July is on Saturday this year, the American markets have a day off on Friday. It means that the trading of American stocks, indices, as well as metals and oil will be closed earlier than usual on Friday, July 3rd. Due to the day off, the US decided to publish the statistics on the labor market on Thursday. This is very unusual. Normally, the publication is just postponed till next week, but let's not judge. Better take a look at the digits. In May, the unemployment rate was 13.3%, while in June it may remain with 10%. The lower, the better for the dollar. The average hourly wage may have declined, but this is normal for a shrinking labor market. The non-farm payrolls may easily have started to restore actively, but we will not even try to predict these digits. Let us wait for the facts. Obviously, the stronger the statistics on the labor market, the better support the dollar will have. Traditionally, we finish with the cryptocurrencies. In the crypto world, activity has been exterminated. Nothing at all is happening. There is no development to the story of Ethereum 2.0, so the driver is losing power. The Bitcoin news is abundant, but all of them are inefficient. The dynamics seem to have totally gone to fiat assets. Well, this is the news for this week. Scarce, but not stressful. If you like the video, subscribe to our channel, click a bell and leave a like. There is a lot of exciting news coming. See you next week.